There might be a section of Kenyans who are beginning to feel betrayed by the company. And I know you've issued a statement to sort of clear some of these issues, but I would want to know, is Safaricom betraying Kenyans?
The most important thing is not about targeting us as Safaricom. It is about ensuring that the revenue authorities can expand their tax base.
Did a very warm welcome to you. This is Market Pulse, and I'm right here with Peter Ndegwa, a day after he has just announced the half-year results of the company and quite some impressive numbers that we have been able to see. A brief recap on that: we're looking at Kenyan business revenue is up about 12.9%, which is 277.5 billion. Net income also the same, 14.1% growth to 47.5 billion shillings. However, there seems to be a bit of speculation on what's happening in Ethiopia. We've seen this, what the results from Ethiopia bringing down the group performance by a negative of about 17.7%. And I just want to get it from you. What's happening in Ethiopia? I know you talked about hyperinflation and a couple of other things, but I really want to understand the business in Ethiopia and how that landscape is.
There has been a very big change. When we went into Ethiopia, the foreign exchange regime was a controlled regime where the currency rate was always controlled by the Bank of Ethiopia. Yeah. This year, the government has made a very bold decision to actually allow for the currency to float. So today, as a corporate, Safaricom Ethiopia can go to a bank and agree a rate. There was already a rate that was trading there. So the official rate was around between 56 and 58. What we call the parallel rate, the informal rate, was around 115 to 120. And all that has happened is the new rate, when the currency has been floated, has gotten closer to where the parallel rate was. For us, it is very good for the long term because I think it's important that Ethiopia actually has an open market. Yeah. But in the near term, we have a challenge. So there are two elements that we have been saying to our investors and also the public. Initial stages of Ethiopia was always going to have a lot of costs that were not going to be backed by revenue because we are investing more than actually we are earning revenues. But we are starting, so the Ethiopia business is very strong now. So there isn't anything happening in Ethiopia. In fact, we are very satisfied with the commercial acceleration. Here are the three facts about Ethiopia. We've set up a network that is about 3,000 sites, all 4G and 5G ready. So 4G running, but 5G ready if we wanted to switch it on. That is about half of what we have in Kenya in only 2.5 years. The second is we've seen customer acceleration, 50% growth in customers to 6 million. And we believe by the end of the financial year, which is March, we'll get closer to 10 million customers, which means that the business is starting. So on an underlying basis, if we didn't have the devaluation or the depreciation of the Ethiopia currency, our group results, net income, would have grown by 22%.
And the reason I ask this, Peter, is because when you see the company hemorrhaging about 33.8 billion shillings, that is no small amount. And the question that then comes to the mind of a lot of your investors is, when are we likely to see consistent profitability coming from Ethiopia?
I need to correct the hemorrhaging of 33 billion. Yeah. Then the number that is relevant for Kenya, remember our shareholding is about 51%. So the so-called loss, which you expect at the beginning of our business, at this stage of our business, is 17 billion that has been affected, that has arisen as a result of the devaluation of the currency. This is purely devaluation of the currency. Okay. As I said, if we did not have that devaluation of the currency, we would have seen growth. Ethiopia has contributed 10% on top line growth, and would have seen acceleration in the bottom line. So this is a one-off. Just like in other countries, in Ghana, in Nigeria, in Egypt, where we've had some currency depreciation or devaluation, we expected it, only that it came about a year or two earlier than we thought. It's actually okay that it is coming now when our business is smaller. So, but going forward, we believe that Ethiopia is going to be a very, very strong driver of the group results of Safaricom.
The other aspect that we would want to know is what are some of the measures that Safaricom is currently putting in place to mitigate against some of these FX losses in Ethiopia?
So that is a very important question. So in every country where we've had devaluation, the instruments that you have as a corporate to be able to mitigate against that is to ensure that the price increases allow for that to be covered. So the market has already taken 25% price increase. So Ethiopia took 25%. We've taken largely similar price increases. So you'll see the benefit of that price increase coming in the second half of the year. The second is to start to localize. So you started to localize a lot of the sourcing. Yeah. So instead of sourcing in dollars, like towers were previously imported, now we are having local manufacturing. And then the third is to avoid loans that are denominated in dollars. At the moment, we have $100 million of loan from IFC. We are not going to take any more loans that are denominated in dollars. We will be taking mostly locally denominated bill loans, yeah. so that we make sure that the revenue which is in bill matches the cost that we are incurring. And that's something that we're always going to do because we knew that the foreign exchange regime was always going to be reframed.
You've talked about the investments that are currently being done in Ethiopia, yeah. And also just looking at your capex for the last half that we have seen, about 47.5% of the group's total capex went to Ethiopia. Mm-hmm. And I'm thinking for investors, the question they will have is how long are we going to keep investing in Ethiopia, and when are we going to start seeing the results of these investments?
So when we went into Ethiopia, we had messaged to investors that we are going to invest about $1.5 billion yeah. in capex. Yeah, and in addition to that, we already knew that the license and all for us to win the license, we paid about $1 billion. So up to about $2.5 billion, of which about 51 or half of that is attributable to Safaricom, yeah. because our share is about 51%. So we have invested so far $2 billion. So we have another $500 million to go, and that was always part of the plan. Mm-hmm. And we said that by 27, which is financial year ending 31st of March 2027, we are going to break even from an EBITDA perspective. So from that time, the acceleration in the group numbers resulting from Ethiopia will be material. So in 2 years' time, we should see that fully normalized. For next year, we will see a significant growth in Safaricom results as a result of incorporating Ethiopia. And the reason is because we've already taken the losses. Now, going forward, we will see much lower numbers coming from Ethiopia from a setup cost. Remember, these are losses that are related to the investment we are making, rather than because the business is not making money. And in the next 2 years, we also expect that our customer numbers will have hit about 15 million. Yeah. 15 million is about half of what we have in Kenya. So we will have a scale business that will allow us to be reporting profits from 27. And it was always going to be like this. In new businesses, even Safaricom, when it started, M-PESA, when we started in 2007, you have to invest and then start to recoup that money as part of from year 4 and 5. That's the way business curve works.
And just remaining on this topic of capex, again, we're seeing a significant amount going towards network expansion and systems here in Kenya. And I just want to know, what gap is Safaricom trying to bridge, even as you increase investment in that space, and what is the end goal?
So you're right. In Kenya, we've been investing anywhere between 40 and 45 billion Kenya shillings every year. And there are 3 areas we invest. One is to ensure that we continue to expand our radio network. So now we have about 95% of all our sites on 5G, and 95% coverage of our population having 4G plus. So we will continue, because even when you have 4G, you do invest to increase capacity, because you have more customers using mobile data. You'll have seen that our mobile data business continues to accelerate very significantly. Yeah. And as we bring more devices, 4G devices onto the ecosystem, we expect more investment in that area. The second, which is very important, we are investing in IT infrastructure, because we want to be a technology company, yeah. Whether that's data centers, whether that is systems like M-PESA, This year we are going to be investing in something we are calling M-PESA 2.0 in terms of technology that will allow us to have a much more modern IT infrastructure. We've just launched an upgrade of what we call the converged billing system, which will allow Jimmy, to send you a bill that is more understandable, that is easier. For businesses, it's much easier because then you can bundle products together and be able to bill to customers. So it is both the network side, the IT side, but also on the fixed side, the home business is growing very strongly, now 23% growth, and we are accelerating that. That requires fiber infrastructure for us to invest in fiber. We've just doubled the capacity that we are offering our customers, and for us to do that, we have to invest. We have to keep investing.
Let's move to my favorite topic,
yes,
which is of course M-PESA and Fuliza. Now, what we have seen in these results is that the number of customers has increased about 4% to 33.5 million people. And I just want to know, out of these new customers, how much was disbursed on the Fuliza platform? And how much did Safaricom make in terms of interest out of that disbursement?
In terms of Fuliza specifically, you'll have seen that our credit propositions was largely about flat in terms of our revenue. And the reason for that is not because we didn't grow Fuliza. Remember last year we actually reduced the price of Fuliza because we realized that customers were using Fuliza as a term loan, but we want customers to use Fuliza as an emergency credit. So the way we did it, you have a small amount that you are charged at the beginning, and then 3 days that is free, and then after that you are charged a specific amount. So we haven't, although we have seen the amount of money that people are borrowing on Fuliza increase, we have actually not earned more money from Fuliza this year. It's about flat. And the reason is because we have reduced the price so that it is more affordable. But in future, we will start to see the benefit of that investment in lower prices. We know customers are going under pressure, but there's still about 7 to 8 million customers who are borrowing on a regular basis on Fuliza. In fact, the biggest thing that we keep being asked by customers, when are you increasing my limit? That's the biggest question. So I think the Fuliza is now playing a much better role. It's more affordable, and we are seeing significant penetration of our customers using Fuliza.
Is this a product offering that you're looking to introduce to the Ethiopian market?
In future, we expect that we'll introduce credit products. They may not be Fuliza, but it needs to fit the needs of Ethiopians. So because we can't just because a product is successful in Kenya, we can't just pick it and launch. So we will introduce some credit products in Ethiopia. We will also start to look at opportunities to expand, whether that is savings. So we don't have to use the same path that we used in Kenya. And we believe that we'll introduce credit much earlier than we did in Kenya. But I want to wait for the time when we introduce them, because it will require regulatory approval, it will require Bank of Ethiopia approval, because until we get that, we generally don't go to market and talk about the products that we launch.
Is Safaricom considering getting into the insurance business? Because
payments is generally a mature business, we continue to improve how people pay. We've launched Ratiba, which is about standing orders. But we need, now that financial inclusion is in a good place, we need financial health. And financial health include allowing customers to access insurance, because insurance penetration in this country is low. And also savings is saved in a way that is attractive. So the way we are looking at it is start with insurance that supports our business, which is, we've started with device insurance. So you have a brokerage license, but the actual insurance happens through licensed insurance companies, in the same way that we do on the credit side with banks. So that's the same thing. So it's not that Safaricom is going into insurance. Safaricom is going to co-create products with licensed companies to distribute insurance products, but ensure that the penetration start to increase in the same way that we've done it on the payment side. We'll do it on the insurance side, and also the same thing with democratizing savings.
There might be a section of Kenyans who are beginning to feel betrayed by the company, and I know you've issued a statement to sort of clear some of these issues. But I would want to know: is Safaricom betraying Kenyans?
I think the issue that has been raised is whether privacy has been affected.
Yeah.
And that is actually a misconception, and it's a lot of false information that has gone out there, and we've expressed this in terms of how it has been covered. But we've always maintained privacy as a primary way of keeping trust. We follow the law, the data protection law in Kenya. We've just been certified, in ISO certified on the privacy side, and it's difficult to be certified at an international level if you do not have the controls that allow for data to be protected. We don't share data. I know there have been some media reports that we share data. I said it even on the interview during our 24th anniversary celebration, that we don't share data. I think there has been a lot of misunderstanding there out there. But the point I want to make, and I want to commit, is we deliver reliable, always on, safe, secure. That's why M-PESA works every day. We transact a lot of. If we were sharing data, it would have been done in the past. So I think there has been quite a lot of misunderstanding and also misreporting on the issue. But as Safaricom, we are very clear. We don't share any customer data. We protect information in line with the law, and we'll continue to do that. And that's the only way we are able to guarantee reliable, always on. Even on the M-PESA side, the amount of transaction, we transact 4,000 transactions per second. You can't do that if you are sharing information.
Again, there's been a lot of conversation around government looking at merchant transactions and trying to tap into that to be able to increase revenue in the country. And I just want to know, from the business side of it, what would be the net effect of that?
As far as we are concerned, the most important thing is not about targeting us as Safaricom. It is about ensuring that the revenue authorities can expand their tax base. So we will, and we have always made the interest, but also the concerns of our ecosystem of merchants. I remember merchants, Lipa na M-PESA merchants have increased from 170,000 to close to 700,000 now, which means the actual benefit to the society is quite clear. So I can't really comment on how it will work, but all I can say is that we represent a franchise of merchants that are an important community in this country, and I'm sure the KRA will always listen to our views.
There has been a lot of chatter and a lot of conversations online on whether Safaricom is frustrating other players trying to get into the internet provision services in the country. One such complaint is in relation to Starlink. And there has been a conversation that Safaricom customers cannot be able to pay for some of the services that, let's say, a provider like Starlink offers. And I just want to understand, is this true? And if so, what is Safaricom doing to make sure that it does not then limit their customers? Because these are Safaricom customers in the first place using M-PESA to try and do a different transaction.
You know, when you're a successful company, everyone will always say, oh, there's something wrong with this and the other. We do not have the ability nor the interest to stop any customer from buying any service from any other player. That is a regulatory one. That's a regulatory responsibility. Safaricom cannot stop you as Jimmy from going to buy Starlink. Starlink is available. And also, why would we stop Starlink? Starlink is in 100 countries. The misunderstanding was there was a letter that we sent around our views on satellite, not about Starlink. Starlink is just one of the players on the satellite category as a technology, just like we'd have a view on fixed, on 5G, and we've always expressed this to our regulators. And the way that letter was leaked was only half of the letter was leaked, because we were expressing a view as a player, and all the other players have expressed their own view. Starlink is a big organization. We know all the ownership, so it's a big organization that can look after itself. So why would people think that Safaricom is getting in the way? There was a claim, and it is in a court of law, so I can't comment, that we may have restricted people's ability to pay. We have not restricted anyone. People are paying with M-PESA. Why would we restrict? It gives us revenue. Why would we restrict anyone from accessing another service using M-PESA. And we don't have the authority to do that.
All right. So, Peter, in closing, looking at the next half of the year, what should customers expect, and what is your outlook for the business?
On the Ethiopia side, we have very strong commercial momentum. So we expect that to continue, and also continue to manage some of the external issues that we are seeing in Ethiopia. But for Kenya, look out for opportunities to be rewarded, but also a lot of launches that will allow us to celebrate 18 and 25 years in style.
All right, Peter, congratulations.
Thank you.
And thank you so much for making time to speak to us. And of course, that's how we wrap up this edition of Market Pulse. Let's do this again, same time, same place next week.